Accruals, how to configure and calculate accruals in SAP. Now let's first discuss the journal entries. The journal entries are quite simple, but there is an added layer of entry. Let's say PTCL is charging you for the internet and it is for 3 months. 3 months prepaid.
ਸਿਰਫ ਇਸ ਵਾਸਤੇ ਚੀਜ਼ਾਂ ਨੂੰ ਨਾ ਮੈਂ ਇਗਨੋਰ ਕਰਦਾ
And
ਹਾਂ ਤੇ ਕੱਲ ਨੂੰ ਇਹ ਨਾ ਕਹਣ ਕਿ ਲੋ ਜੀ ਵਸੀਮ ਸਾਹਿਬ ਇੱਥੇ
let's say for 1800 is per month. For 3 months, it will be how much? 00 5400. Okay. Now this is the amount, the total amount that will be absorbed over 3 months. Now, what you do is you pay cash. PTCL is your vendor and you pay with cash. 5400 is paid. Okay, it's already paid. Now, the entry is the entry which is a simple journal entry. PTCL vendor is debited and you are left short with cash. Okay, and you actually have availed the internet services. But thing is, month one, you have used, let's say, 1200 of internet bandwidth. The entry will be cost account, which is internet expense, and that will be 1200. This is debit. Credit will be balance sheet account, which is accrual, internet accrual. Now, and that will be 1200. Okay, this was month one. From 1200, what is left back is 5400 minus 1200, and that equals 4200. You have already posted in month one this cash. Okay, you've already posted it. This is already paid. This is prepaid. Now, month two, let's say another 1400 of internet bandwidth was utilized. Okay, now what you left is 4200 minus 1400, and that becomes 2800, right? For the third month. Remaining balance. Okay. Now again, debit, cost account, internet expense. This is absorbed in the very second month. Credit, balance sheet, account, internet, accrual, 1400. Now, what is this accrual? A sort of, call it offsetting account or a liability account or a clearing account, which is used for knocking off. It has to be knocked out with debit and credit 0. Okay, this is a clearing account, but with the shape of liability account. because you have to do it at month end. What you're left with is 2800. Month 3, let's say you have consumed 2800 of internet bandwidth. Okay. Now, 2800 cost account, which is internet expense, 2800 credit balance sheet account, internet accrual, 2800. Okay. Now, 3 months of expense is now 5400 all absorbed. Okay. Plus accrual, which is a liability, you have to clear it, is 5400 outstanding, right? Now you have to clear this. This is gone. This is already done. This is absorbed. Now single entry is remaining. Okay. What you'll do, the extra journal entry is this every month. Month 1, which is this is the month 1200. The journal entry is debit accrual reversal. Okay. Accrual reversal will be 1200. Credit will be liability or vendor account, or because you have to book the vendor credit, because you have already paid the vendor, the credit had to be standing. So in month 1, you have already paid the vendor, it's already gone, but you have to balance it out. So you'll balance it out in the same way. You have to knock this out with a contra entry. Okay. Month 2, same. Debit accrual reversal, same account. How much month 2 was? 1400. Credit liability account, 1400. Month 3, accrual reversal. Month 3, 2800. 2800 credit liability, 2800. There is another way also, which is called delta posting, interim posting, delta posting. Okay. It's the same way as where debit expense account, rather there is another way. Delta posting is done in this way. Delta posting, expense account, 1200 to expense accrual account, 1200. Okay. Let's say this was the whole amount. Expense accrual is reversed and the vendor credit is standing. This is for postpaid. Okay. This is delta posting scenario 2. Scenario number 2. You can use and absorb the expenses without paying the vendor. Postpaid. An expense accrual. Expense accrual is reversal of this one while the vendor is credited for postpaid. And then it is paid with cash 1200 and cash 1200, right? This is the accrual method of doing things. Okay. Now, accrual engine. Let's check it out. SPRO. I hope you got the point. The point is clear or not. If there is any doubt in general entities, let me ask, because sometimes it gets a little bit tricky because you have to reverse. The reversal is the extra entry. Okay. Accrual engine. Accrual. General ledger accounting. Accruals management. Set application component to be customized. Component will be AC. There are two types of accruals. Purchase order accruals are also part of it. We will use AC. Okay. Okay. The other part is has been set to AC. Basic settings, assign company codes. What's our company code? 8842. Venus Group 8842. Save. AA42. Okay. Okay. Next step is closed fiscal year for changes to accrual objects. 8842. Closed fiscal year will be 2022. Save. Okay. Accrual item type. Okay. Upload. We can also upload it, but let's not go to that right now. Linear. Actual cost linear. Upload amount linear. Okay. Let's say this is linear periodic accrual periodic items for ledger growth. Posting frequency per posting period. Closing frequency. Closing frequency will be, well, let's try a new entry. Okay, company code is AA42 ledger group. No need. Posting frequency will be per posting monthly, daily, quarterly, as per the client process. Inverse posting, I told you what is inverse posting over here. We were going for a reversal. Okay, reversal is here. Reversal is here. This is the reversal method. Okay. Acha. Next is approval and reviews will be required from the management. Okay, the threshold variant will be 0, 1. Review on 3rd to 5th day after period end. This is usually the first week of the next month to post your accruals. Okay. Now, let's save it. I hope this is clear or it's confusing. Let's go for the next step, and that is assign currency types. Okay. Company code, new entries, accrual, periodic, AA42, ledger 0L, currency type will be company code, 10 PKR. Currency conversion none always, an amount always zero by accrual engine, which one? Or general ledger. Okay. Currency handling, one entry chosen, save. But this is the process that you have to learn. Enter. Okay. Special operators, technical settings, accrual objects. Just a minute. Accrual methods. Actual cost post number, for example, costs posted by invoices. This will be the method in the component ACAC. Interview will always ask you about the component ACAC because there are two methods: purchase order accruals and cost or expense accruals. This is ACAC expense accruals, and you will be calculating on invoices. Okay. Linear distribution, this is for posting interest amounts or installment amounts. In case if your client is paying a rent or paying installments to procure an asset, that will be linear distribution. Okay. Okay. Mandatory accrual methods, ACAC, execute. No dates. Okay, no worries. Approval of accruals. Let's do this in the next lecture because now it is getting a little complex, but